Hey guys, Dr. Bobby here. Of course, you already know I am a board certified anesthesiologist. And listen, in my last video concerning rental real estate and real estate investing, I got a lot of positive feedback, and it appears that a lot of you guys want to know more about this. So I figured, why not start by starting? I started investing in real estate back in 2016, and one of the hardest parts about getting started was the fact that it was extremely hard in locating my first property. So in today's video, I wanted to talk briefly about 3 ways that I found success in finding my rental property. Now, just as a disclaimer, I am not a financial advisor, and the information that I share here are strictly my opinions based on what's happened to me. So if you have questions as it relates to if this information will fit your financial picture, please consult a financial advisor. And now, without further ado, here are 3 ways in which I have found success in locating investment properties. Number 1 would be the MLS, or the multiple listing service. Think of the multiple listing service as sort of the most common way in which you would be able to find a house. It's the way that you would be able to find a house if you were actually looking for one to live in. Basically, it is a service or a list service that is sponsored by licensed real estate agents, whereby a real estate agent comes to your property or your home. Your house is then appraised and placed on the market at a value that is thought to be that of the home. People come by the property, they look at the property, and they decide whether or not they want to place an offer through a licensed real estate agent, and they move forward. Depending on your market, this could potentially be a pretty good way in which to find your first property, and honestly, I think it's probably the safest. I say that because using a licensed real estate agent to purchase a property provides you with certain layers of protection that you otherwise will not have if you were at this alone. Now, one word of caution as it relates to using a licensed real estate agent. Real estate agents are great. They are there to protect you. They are there to help guide your decisions in terms of buying a property. But it is your responsibility as a potential property investor to understand the numbers. Therefore, I suggest that if you use a real estate agent to purchase properties from the MLS, that you find a real estate agent that understands real estate investing, that understands how to evaluate properties and evaluate numbers. You need someone who has a track record of ensuring that people are not overpaying for properties based on the market, and someone who understands the needs of a person who's looking to invest in properties. Because one of the things you can run into with a real estate agent is someone who understands a retail buyer. Your responsibility as a real estate investor is to buy a property at or below market value such that you can create a space where you can have cash flow. And remember, in my last video, I talked about the fact that cash flow was the money that was left as profit after all of the expenses were paid on this particular property. Typically, people who are investing in rental real estate are doing so to ensure that they are getting cash flow. And a lot of times, unfortunately, you have real estate agents who understand the markets, but they don't understand the numbers well enough to ensure that you're going to be able to cash flow. So I would suggest that you choose a real estate agent who understands these things, and that before you get involved in getting into real estate, before you get involved in buying properties, that you spend enough time to educate yourself on exactly how you need to evaluate these properties so that you aren't depending on anyone else to do it for you. Now, with that being said, once you do have a real estate agent, moving forward with one could be a super rewarding experience once you've made your expectations known. Once you understand the areas in which you want to invest, the real estate agent would then be able to locate properties and show you these properties, and then it would be up to you to make a decision. One of the other major drawbacks of using the MLS is that it's the most trafficked way in which to find investment properties. So you've got to understand that in most markets, there are a lot of people who are either thinking about investing in real estate or who are actually actively investing and who are very good at investing. Now, mind you, most of these people are probably not buying properties off of the multiple listing service, because there are other ways in which I'm going to get into to buy properties. But you need to understand that depending on whatever market you're in, there is supply and there is demand. And unfortunately, if there is a higher demand than supply, you may be paying more for these properties, and you don't want to pay more. The first rule of investing in real estate is to ensure that you never overpay. Additionally, because a lot of investors use the MLS to field properties and to place offers, it's important to note that the potential likelihood of finding a property in this way, depending on your market, can be pretty low. So you may have to think about other methods to locate properties. Number two would be foreclosures. Foreclosed properties are those properties that have been reclaimed by the banks that have loaned out money from folks who have been unable to pay for the property. So imagine you own a property, you are paying the mortgage on the property, you fall on hard times, you're unable to pay the mortgage on that property. The bank through which you have assumed the note or the loan can then come back and repossess the home and then sell it to someone else, typically at a reduced cost. So this is complete pay dirt for folks who are interested in investing in real estate, because one of the cardinal rules is you typically want to buy at a lower price, at a discount price, such that you can then have more in the way of cash flow, or you can create value by improving the property. So typically the good thing about foreclosed properties are that they are priced at a lower price point, which would give you a lot more wiggle room. The unfortunate part about a lot of foreclosed properties are twofold. They can be pretty distressed, and by distressed I mean they can be pretty raggedy. Now, there's nothing wrong with a raggedy property. I have taken many a raggedy property and made them better. And typically I like ugly houses, primarily because it gives you the opportunity to force appreciation. I'll get into a lot of these other terms in future videos, but essentially you would be taking a property that is undervalued because it is not in the best of conditions. You would then improve that property and basically force what we call appreciation and equity into the property. So basically you buy a property at a lower cost, put the appropriate improvements to increase the after repair value, and recoup that in terms of your cash flow and in terms of the appreciation on the property. So this can be hugely important to real estate agents and folks who are interested in increasing their cash flow in this way. This can also be a downside if this is your first property, because if you get in over your head, you're not going to understand how to place offers on these properties because you don't have enough experience in understanding how much things cost to fix. So what I would suggest, that if you were to buy a foreclosed property, I would suggest you take some time to educate yourself on exactly how much different aspects of renovation costs, potentially develop relationships with folks who fix houses, and get some level of understanding as it relates to how much they would be charging you, so that you ultimately don't overpay for these properties. Because the other thing is that if you're looking for foreclosed properties as a property investor, imagine how many other investors are also looking at these properties. So again, this comes down to a supply and demand issue. Depending on your area, the supply could be severely low. And since a lot of people understand the value of investing in real estate, and they have dreams of grandeur, whether they are founded or unfounded, to invest in real estate, typically the demand for these properties will be exponentially higher than the supply. And so, as you could imagine, the cost of these properties will increase. And please, please, please know the numbers. Never overpay. Under no circumstances should you be overpaying for a property, because you can find yourself in a lot of trouble as it relates to being able to cash flow, or you might find yourself being in the negative. And number three, through what we call wholesalers. Now, I know that you guys have all seen those signs, "We buy houses for cash." These signs are typically by folks who do what we call wholesaling of homes. Now, essentially what a wholesaler is they're a middleman. Imagine someone who goes by a house that looks like it needs a bunch of work. They seem to look at a house and they see that it appears to be an absentee landlord, or someone who's not caring about the house. They would then approach that person and figure out a way in which they could sell that property to someone else. Now, buying properties in this fashion could be hugely advantageous to folks who understand real estate, because typically wholesaled properties are properties that are significantly distressed, and you're essentially buying a property without the use of a real estate agent. This is not a way for folks who are not seasoned in understanding real estate to be buying properties. Buying a property requires a lot of knowledge as it relates to taxes, as it relates to the paperwork in terms of back owed taxes, as it relates to liens, etc. This can be pretty advantageous for someone who understands real estate and who understands the way in which you are to buy houses. I would not recommend using a wholesaler as your first deal, primarily because you are going to not have as much in the way of protections. And if you don't understand what to look for, not just how to run the numbers, if you don't understand how title searches work, if you don't understand how to evaluate properties in such a way where you understand how much you're going to have to put in this property in order to bring it up to the appropriate after repair value, you may want to stick away from buying houses from folks like wholesalers. But they can be hugely advantageous ways to buy homes at significantly reduced costs, so that you can then add value to the property and cash flow the property or sell it at exponentially increased value. So wholesalers are great, but they are really more of a 2.0, more of an advanced way to buy houses as opposed to using a licensed real estate agent. So what I would suggest for folks to do is that if you are inexperienced and if you are uneducated in terms of how to evaluate properties, how to understand fixing properties, and how to run the numbers, you should use a real estate agent at the beginning until you get that level of knowledge. As you continue to progress, using a wholesaler would probably be more advantageous for you to be able to get properties at a reduced cost and potentially a higher cash flow. And again, just like using the MLS and also looking at foreclosed properties, you may run up against a lot of competition with good properties. Depending on your area and if you live in a hot market, there will be a large demand for these properties. So, as of late, I have seen a lot of properties that were going for lower cost, going for much higher cost, and ultimately folks overpaying for these properties. And again, the first rule of real estate investing is to what? Not overpay. So again, if you find yourself in a situation where you believe that after you repair this property and put it on the market to either rent or to sell, you are going to be losing money, or you are going to be really close on the margins, you may want to think about not buying that particular property. So this goes for properties bought through wholesalers. This goes for properties bought on the MLS and foreclosed properties. Listen, thanks so much for tuning into the video. I hope you have found this video to be informative, and I hope that this lights a fire under you as it relates to starting in rental real estate, because it can be a hugely advantageous way for you to build generational wealth for your family. Now, I definitely plan on doing more videos as it relates to real estate, because I'm sure you can tell based on the way I'm talking about this that these are a little bit easier for me to make because I'm actually passionate about the topic. So with that being said, please like, share, and subscribe to the content. Please go down in the comments and write me some questions as it relates to rental real estate, and questions that you may have or things that you believe that may be holding you back from actually taking the next steps. Remember, you can only start by starting. Again, please share this video with anyone that you know, and I will catch you on the next video. Peace.